Money, money, money. All right, it's a beautiful day. I'm about to head to the beach, hence the attire, and yes, America. But I've had quite a few ask me what's going on with bank stocks. To be honest, I'm not totally sure. Maybe it's the debt ceiling deal, maybe it's the job reports, but one thing I know for sure, online banks are shaking up the financial world and leaving their brick and mortar counterparts in the dust. So in a surprising, or maybe not so surprising twist, these digital darlings managed to do what seemed impossible in 2023. They raked in more deposits than they lost. Yes, cue that mic drop. Now before we get into it, smash that like, thumbs up button, and subscribe. Much appreciated in advance as always. So let's break it down. While regional bank powerhouses like US Bank, Truist Financial, and Citizens Financial saw their deposits take a nosedive, online champions like Ally Financial and Goldman Sachs Group's Marcus Bank were cheering as their deposits soared higher. Even Capital One, with its limited branch network, managed to defy the odds and come out on top. Now, a little bit more about that. Well, what's their secret is the question, right? It's all about going digital, my friends. These online-focused banks can offer better rates because they don't have to deal with the hefty costs of real estate. Yes, that overhead, employees, and equipment that come with traditional branches. It's like, having your cake and eating it too, as the old expression goes. But don't think it's all smooth sailing for the big regional banks. Oh, no. They're facing a double whammy. First, the recent collapse of mid-sized banks has customers flocking to the safety of the biggest lenders. Second, with the Federal Reserve raising interest rates, folks are moving their money to treasury bonds and money market funds for juicier returns. It's a deposit disaster for US banks, with the first quarter witnessing the biggest drop ever recorded, according to the Federal Deposit Insurance Corp. Talk about a rough start to the year. Yeah, not too good. Even the banking behemoths, like Bank of America and Wells Fargo, couldn't escape the deposit drought. Sure, they managed to snag customers fleeing smaller banks, but their own deposits took a slight hit. Kudos to JP Morgan Chase, though, for being the exception with a 2% deposit increase. They must be doing something right. Not exactly sure what it is. If you know, tell me in the comments. Now, here's where things get really interesting. Despite all the chaos, online-focused banks are stealing the show with their deposit gains. Capital One saw a whopping 5% increase in deposits from the previous quarter, while Ally Financial managed a respectable 1% bump. Goldman Sachs Group's Marcus Bank also joined the party. Although they kept the specifics under wraps, they didn't tell us just yet. Talk about a digital revolution, though. A lot of these digital banks are crushing it. And there's also a catch, though. Remember this, with great success comes great cost. These online pioneers had to shell out higher interest rates, of course, to lure in the deposits. I know some people that are getting upwards of 5%. Ally dished out an average interest rate of 3.2% in the first quarter, while Capital One followed close behind at 2.4%. That's more than a 2 percentage points higher than last year. In contrast, Bank of America and Wells Fargo were stuck at around 1%. Ouch. By the way, if you're not gaining more than 3% right now, let me know, I'll help you. This shift towards online banking adds another layer to the great branching debate. Customers have been turning to technology for their everyday banking needs, especially since the dreaded COVID-19 pandemic hit. Banks have been closing branches left and right. Yes, reducing overhead, reducing costs, with a staggering 6,100 shut down between 2019 and 2022. That's the highest number of closures in history over a 3-year span. Bye-bye, old school branches. I can't even tell you the last time I went into a branch, to be honest. Of course, traditional banks argue that even the savviest of customers still want a physical branch for those more complex transactions, and I suppose that's true, like getting a mortgage perhaps. But branches can be a powerful tool for drumming up business as well, as long as they're in the right places, right? Major cities, those kind of places. Take JP Morgan, for example. They've been strategically opening branches in 25 new states and the District of Columbia since 2018, all while reducing their overall network size by hundreds of branches. It's interesting. It's all about finding those sweet spots, right? Don't expect the bank branch carnage to end anytime soon. Banks are expected to keep slashing branch costs as they brace themselves for the interest they pay on deposits to catch up with what they earn from loans. It's a tough pill to swallow for traditional branch-based banks, and analysts aren't holding back their assessment. According to Donald Fandetti from Wells Fargo, if you're a traditional branch-based bank and you need to start paying more for your deposits, it's going to hurt. Seems pretty obvious, but hey, interest rates, more pay, still a lot of overhead, it's not a good combination. But fear not, for the world of finance has more surprises in store. Credit card giants like American Express and Synchrony Financial saw deposits rise on a quarterly basis. These card issuers don't rely on traditional branches and make their money from loans and transaction fees. Talk about playing the game to their advantage. Yes, I actually have some stock in those, and I've seen those rise, which is nice. And the icing on the cake? Discover Financial saw deposits rise by a whopping 4% in the first quarter. They managed to snatch up a majority of those deposits from the mega banks. How did they do it, you ask? Well, Chief Executive Roger Hochschild spilled the beans saying, without the cost of branches, we can offer a higher rate. Looks like the traditional banks need to rethink their game plan because people want that bang for their buck. They do. And they're going to get it some way or the other, so you better move on to the future of banking, right? All right, because the winds of change are blowing through the banking industry, online banks are now strutting their stuff, right? Leaving those traditional banks scratching their heads and wondering, is this a digital revolution? Well, yeah, it is, and it's only just getting started. Who knows what the future holds? One thing's for sure. It's going to be probably a pretty wild ride. Hope you're on and ready for it. What do you think about this latest development? Let me know in the comments below. Also, if you have a topic, just like this banking one I was asked about, that you'd like me to cover in a future video, please let me know. As always, don't forget to follow, thumbs up, like, and subscribe for more updates on the wild world of finance. Thanks for tuning in.